Hello and welcome to Virtual Investor Conferences. My name is Anthony Kraus, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Impact Silver. Please note, you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Stephen Gold, Head of Corporate Development of Impact Silver Corp, which trades on the OTCQB venture market under the symbol ISVLF and on the TSXV under the symbol IPT. Welcome back, Stephen.
Thank you, Anthony, and good morning to everyone. Thank you for joining. For those of you who may or may not know Impact Silver, we've been producing in Mexico for almost 18 years, and over the course of time, we've managed to take older mines and brought them into production and advance exploration programs that have helped expand both the potential of these mines as well as the overall production profile and profitability of these mines. So just to move on here, standard disclosure statements here for everyone to consider as we move forward. So Impact Silver is I think a unique company within the complex of the mining industry. We sort of look at ourselves as a bit of what we call a trifecta, in that we have existing production, we have growth, and we have exploration. The company was founded, again, almost 18 years ago on the basis of silver. We had taken some mines in southern Mexico and brought them up to speed, so to speak, performed some maintenance, and have been producing ever since. More recently, we've acquired a high-grade zinc mine in northern Mexico, and between both assets, and I'll get into them shortly, offer some very significant exploration upside that allows not just looking at from a commodity price standpoint, but also great improvement over time. We maintain a strong balance sheet. This has been sort of a mantra of the company over the last 2 decades. We have just under $10 million in cash and no debt. We have never had debt and intend to continue with that cash-rich, debt-free profile going forward. Management team, multi-decade experience. I think the senior members of our board and our management team speak for themselves. They're the ones who've brought these mines and previous mines into production, weathered downturns and enjoyed upswings as well. So real sort of experienced group that gives investors some comfort as they're considering Impact Silver. We've been expanding production over the course of time. Obviously, we're quite nimble when silver prices and zinc prices are performing well. We're able to quickly add production. I'll get in that shortly. And finally, as I mentioned earlier, there's tremendous exploration potential that we can meaningfully add to existing historical resources that allow some comfort going forward that will be able to provide some growth to shareholders. So this is an interesting slide I'd like to put in here that just gives a sense that especially on the silver side, in a strong silver environment, and you've seen it recently in our share price, but the sector as well. When the silver sector does well, Impact does well. And without going through each one of these sort of cycles over the course of the last almost 10 years, you'll see that if you do like silver, then Impact Silver has traditionally been a name to go forward with. As we've added our zinc profile over the last 2 years, it's starting to see some influence from that too. Zinc has traditionally been what I'd say probably a boring commodity as far as the base metals are concerned, but price of zinc is about almost 40% over the course of the last year, and it's very difficult to find a high-grade zinc player as well. Moving into the cap structure of our company here, so got about a 55, it's a little bit more now, probably about a $59, $60 million market cap. Share ownership is about 70% retail, which is interesting because not long ago, it was almost 100% retail. So starting to get that institutional ownership involved in something that I think will benefit the retail shareholders as the institutions start to play a larger role in this. So just a quick primer on Mexico mining. I think most people are familiar with it, but I'd like to touch on it just from the standpoint that what we hear in the news and see on TV and watch on Netflix is not what Mexico is certainly not all about. Um, Mexico is the Saudi Arabia of silver production. The government takes it exceptionally seriously, notwithstanding various governments over the course of time. The amount of GDP that mining in general and silver mining in particular, accounts for the Mexican economy is so substantial that not only do you see these top tier global mining companies continuously reinvest in Mexico, but you're also seeing tremendous government support. This is not an area that is new to silver production. Certainly, it's an area that has been mining silver and other base metals for over 500 years. Quick overview of our company. So we have two mines. I'm actually going to start at the bottom one over here. It's called the Royal Mines of Zacualpan and Capire Complex. We've got about just under 1 million ounces of silver production capacity. We've been producing for 18 years. There's a silver, lead, and zinc complex primarily weighted towards silver. Two particular production centers, over 211 square kilometers. And just for context, we did a sort of a fun analysis last year to determine how long that it would take us to go through all that 211 square kilometers. And we decided that it would be just under 300 years. So I'm not sure I'm going to make it that long, but certainly from an investor standpoint, that gives you a sense of how massive this land position is. Recently started to see some gold production increase, somewhat unexpected, but now that we've seen it, we think we know where to find more of it. And you're going to start to see that in our financial results. Moving to the top box there at the northern side of the map of Mexico, we'll talk about our Plomosas high-grade zinc mine. This is an acquisition that we took on early in 2023. We bought it. It was in disrepair. We got it cheap, but we knew it would require some work. Fast forward to Q3 of 2023, we brought the asset online, has what we consider, and frankly, from a data standpoint, tremendous zinc grades, definitely top quartile worldwide, 13 to 25%. And it has a historical resource of just under 1 million tons at just over 13% zinc. So what we especially like about this, not just from a production standpoint, because it could be quite a cash cow, is that it has exploration potential that we continue to just scratch the surface of. There's a just over 6 kilometer trend of this high-grade zinc and some significant gold showings toward the north. And we've only started a drilling program earlier this year, and we hope to be able to deliver some assay results to the market over time. So moving back down, as I said, we have the Zacualpan silver in the south, and we have Plomosas zinc in the north. Let's focus on Zacualpan south. This is an area that's been mining for over 500 years. We've cataloged over 5,000 old mine workings and over 42 processing plants that have been in operation over time. This was the area where the natives had actually mined silver as they defended themselves against the European community as they came in the 15 and 1600s. So suffice to say, this is an area that is not only just pro-mining, but certainly very experienced in it over the course of generations. So as I had mentioned, this is an area that the bulk of our revenue comes from right now. This is an operation that can get almost to about 1 million ounces of silver, has tremendous torque in a positive silver market. But what's interesting about it, and exceptionally, I think, nimble, is that you'll notice on the top right of the slide, there's a bar chart of production that sort of swings up and down, and that actually mirrors the price of silver. So what we found is that, unlike many other companies, sort of in that junior to intermediate space, is that when silver prices rise, we're able to rapidly add production and take advantage of that higher price. But when silver prices fall, we're able to take production offline and manage our costs. So this is a real bellwether as far as torque to silver price is concerned, because we're able to add 200,000-300,000 ounces of silver in a period of time, especially when silver price is quite strong. So moving over, so that was the south, that was the silver asset, that's the nuts and butter of our revenue to date, but we're starting to see quite a rapid increase in the northern asset, which is that Plomosas high-grade zinc mine that I talked about earlier. As I mentioned, you're talking almost 25% zincs, which bring it to amongst certainly one of the highest grading zinc mines in the world. We've stumbled upon some gold potential, some historical grades, and some previous drilling as much as 8 grams a ton. We've only started to look in this area. This is an area that we're focusing some of our drilling on. So while certainly this is and will remain a zinc asset, we might have some very nice surprises on the gold side. When we acquired the asset at much lower commodity prices, there was an NPV, an estimated, of $30 million on this asset alone, and had $22 million invested by the previous operator. We bought the asset for $6 million. So really, I think a tremendous buy from our standpoint. Yes, we had to put some money into it, but by and large, I think within the scope of this, we've done quite well on this investment, and expect that not only to provide significant cash flow, but probably be one of the top tier zinc mines anywhere in the region. What they say is, from this standpoint, is the easiest place to find a mine is next to some other mines. And if you look at that little image on the right side of the screen, you'll see the who's who is really surrounded by this area, and they are heavy on the zinc side, whether it's Peñoles or Grupo Mexico. We got Newmont to the south, Go Gold Group, and some other smaller independents. So this is an area that's it's not virgin moose pasture, as they say. This is really an area that has demonstrated its ability to bring significant grade onto the market. Proximity infrastructure, this part of Mexico is about 75 kilometers as the crow flies from southwestern Texas. This is the area from which most American manufacturers had moved over the course of the last 35 years. So suffice to say that while we are remote, we're perhaps an hour and a half from some serious economic centers representing some serious potential for whether it be services or labor supply. As mentioned earlier, this zinc mine, we've explored just 600 kilometers of a just over 6 kilometer strike length. Substantial increase of historical resources is something we anticipate as we continue our drill program in this area. And finally, I'll leave sort of one last thing on this sort of region here. It's really in the middle of nowhere. Notwithstanding being about an hour and a half from a city center. So it allows us to operate, from a security standpoint, we are quite secure. We have not had any incidents. Obviously, our proximity to the U.S. border will bode well from a transport perspective over time. So this mine is online right now. We're ramping up production and expect to hit about 225 tons a day, which is full capacity at some point in Q1 of 2025. So interestingly enough, what we've done in an attempt to attack high costs that have plagued the industry everywhere in the world, specifically in Latin America and definitely in Mexico, is that the two largest costs for any player, no matter who they are, doesn't matter what they say, you can take this to the bank, is energy and labor. And labor prices have increased substantially over the course of the last 2 to 3 years and have chewed into margins, especially as commodity prices had fallen over the last few years leading up to this year. But what we can address is an energy side. And what we've done, and we believe this to be true, that between now and call it mid Q1 of 2025, we'll have eliminated virtually all diesel and other electrical costs from this property, expecting to drop almost 45% of our energy costs, which represent the second largest cost within this mine. So this isn't just a company coming out saying, we have this green approach and we're going to start considering renewable energy. This is a meaningful cash flow contributing net cost savings, as the entire mine will be on Tesla industrial batteries and solar panels operating 24 hours a day. That will meaningfully contribute towards the bottom line. We expect to be the first ones to bring this online, and I'd anticipate that between now and the end of 2025, this will start to become mainstream. So just going over the Plomosas geology one time here. I am not a geologist, but know enough to look at this and look at what we call these carbonate replacement deposits, which is very typical of finding these high grade mineralization structures. So our mining activity now is on two of these structures. We have two rigs drilling right now. We're about to embark on a third. This is a very exciting area that really complements our silver production to the south. Here we're adding this new mine, and we think that between now and call it the next 24 months, we can nearly double the size of the company from a revenue standpoint just by bringing this asset online and bringing it to full production, full capacity. Here's some of the exploration that I talked about. I think, if there's one takeaway from this exciting asset that offers significant upside at the exploration level, is these gold grades. We bought this asset with the expectation that we would continue to expand the size of the resource, the historical resource, at the zinc level, and lo and behold, we stumbled upon some very significant gold grades. So we're sort of looking at this and saying to ourselves, it's definitely a zinc mine. If the gold grades keep up, we sort of have to rethink how we want to shape it, how we're going to process it. But by and large, it should be the worst problem that a company of our size would have when you sort of have the silver production in a rising silver environment, rising zinc production in a rising zinc price environment, and lo and behold, we stumble upon some very significant gold as well. So I'd say stay tuned. We think we'll have some assays between now and the end of the year, and hopefully it'll reflect some of this excitement I'm delivering now. So sort of just to sum up here, the Impact's an interesting company because, as I mentioned earlier, it's primarily been a retail story. The institutions are just coming on board right now. Had a very successful equity financing earlier this year, and saw an increasing portion of that coming from the institution. So we think that there's this whole renaissance of buyers coming into the story right now. Those who know Impact know Impact. Those who don't know Impact tend to get pretty excited about it. They love the silver torque. They like the zinc upside. And of course, we're all blue sky dreamers when it comes to the gold side, and hopefully that will deliver as well. So as far as catalysts are concerned, I'm aware that there's, I think, over 2,000 publicly listed mining companies available to the investor. Why Impact and why now? So again, you have that silver production, high torque, rising silver price reflects quite well into our share price. Our high-grade zinc is coming online, potentially doubling the size of the company over the course of the next 24 months. It's virtually an unknown cash-rich story. Again, just under $10 million in cash, no debt. When people see the story for the first time, we tend to have to go through it in deeper detail because we like to say, if you know it, you know it, and if you don't, you don't. And it's a real intermediate, unique story in that we have that production growth and exploration tilt as well. So over the course of the next, call it quarter, 2 quarters, you'll see growing silver production to take advantage of the rising silver price, rapidly increase output, add exploration, hopefully upside at the high-grade zinc, copper, gold, and silver potential across both assets. We'll see our zinc asset reach full capacity between now and hopefully early 2025. And finally, if the commodity prices, I wouldn't say just hold in, as we're adding towards the benefits of reducing our energy costs and managing our labor costs, we think that this will become quite an exciting cash flow story for not just existing investors, but investors, new investors going forward as well. So with that, I'm just going to go through some of the questions that I can see here. The first question is, would Impact consider keeping silver as a long-term balance sheet asset, or would we always sell 100% of production? So the answer to that is, for the time being, we have offtake agreements that we have to continue to provide certain amounts of silver. So to address that question directly, nothing's ever off the table, but for the time being, it's definitely we sell 100% of our production at both assets. And I'll remind those who don't know, at both assets we have multi-year offtake agreements with Fortune 10 multinationals, and it's basically become whatever we can produce. We should, and we will deliver, and get paid as part of that offtake agreement. The next question here: what are our milestones over the next 12 months? Well, it's to continue, really twofold. It's to continue to raise production at the silver asset to take advantage of obviously the higher silver prices that we're seeing now, and also to bring the zinc asset up to full capacity so we can take advantage of that 40% move in zinc prices. Question here: do we sell silver production at spot prices? Absolutely. All of our production across the board is done at spot. We do not hedge any commodities that we sell whatsoever. Given the next question is, given the large exploration potential, is there any way to speed up production growth to generate free cash flow? So the answer is yes. We're in the midst of doing that at both assets. On one hand, our exploration runway is years and years ahead. So what I mean by that is that we always have an inventory to try to develop the mines faster, so that, and even if it requires a bit of capital, it's worth our while, because we can advance a lot of the development forward and try to increase, whether it be silver production or zinc production, rather than over the course of 2 quarters, maybe over the course of 1 quarter. Next question here. Is the company looking for investment? What kind of equity, royalty, or offtake? So we are not. As I had mentioned, we're a very healthy company financially, strong amount of cash. I think from a cash flow standpoint, especially in 2025 at current prices, we shouldn't be in a position that we expect to require any capital. Having said that, if we get into a point where we think we could add capacity to a mine or a mill at either assets, we definitely look at doing that if the economic basis suggests it's worthwhile doing that to bring forth some cash flow faster than we have now planned. Question here: do we envision actively participating in any consolidation of companies active in silver mining? And we made our acquisition last year. We made our bet with this zinc asset in the north of Mexico. I think for the time being, we're quite satisfied going ahead and developing that. Do we see opportunities every day? We do. Are we one of the few companies that can act? We are. Again, with no debt, strong cash position, very strong assets, high grade. We on one hand is we're tempted to go ahead and try to make everything work, but certainly we're disciplined enough to digest our acquisition from last year, and consider something perhaps in the future. Just going through these questions here. Appears to be about it. Oh, just one last here. Question is, can you discuss your cash flow projections and capital needs, if any, dividends in the future? Predicting cash flow, I think at the intermediate level is a little bit difficult. What I would say is that from a capital need standpoint, we have the cash we need to grow production in this environment. And so, for example, I keep reiterating, our goal is to increase production on the silver side as quickly as possible, from about that 600,000 ounces to 800,000, potentially 900,000 over the course of the next year and a half. And the opportunity there might require some capital. That's where we would spend capital. On the zinc side, we've allocated capital to bringing a non-producing mine into the producing category. And now we're at a point where we're just rapidly developing the mine. Also requires some capital, but should ultimately bear fruit in 2025. So that's it for all the questions here. I would just leave everyone with just one last thought. I've been working across the spectrum over the course of the last 25 years, whether it's on the finance side or the corporate side, in the mining sector. And one of the things I speak personally is that you typically find exploration companies or you find your seniors, or you sort of have your larger producing companies, we'll call those large intermediates. It's unique to find a company with all three going on. So while we're certainly not a large intermediate or a producing major, we're certainly well beyond sort of we're just an exploration company. So your risk is mitigated by being able to own a company that has producing assets, has been operating for 18 years, and at a point now where we're able to say, let's go attack the exploration, let's go try to build capacity, let's go try to increase production in a rising commodity price environment, and at a $58 million market cap with $10 million in cash and two phenomenally high grade producing assets. This is sort of, as I mentioned, of the 2,000 mining companies, I'm sure there are many, but it's unique to find what we call a smaller junior or a smaller intermediate or a larger junior company offering all three. So with that, thank you everyone for joining this morning.